Good morning, everybody. Thank you, Mike, and welcome to everyone both in the room and online. Really good to collaborate with Money Management on this, our first project, and Mike is right. This is a conversation we started probably 2.5, 3 months ago. But it's fair to say that the whole remuneration debate, the whole sustainability insurance debate has got people's attention in the same way that some of the key FOFA reforms got people's attention. And for a lot of the AFA members who are insurance specialists, the intensity of their views was quite pronounced. And so it's a great opportunity today to kind of put that on the table. And John, really appreciate you being here and really appreciate you, in a sense, setting the scene, because the AFA, certainly in closed doors, was talking about the need for a narrative, a need for an explanation as to why did this thing look like it came out of left field. And in fact, it didn't come out of left field. It came from fairly front and centre, and arguably part of the FOFA debate. So to all AFA members and to all insurance specialists who are out there, it's good today to put the topic on the table and tease it out from the advisor, the licensee, the product provider, and ultimately and most importantly from a consumer perspective. Because I think to anyone in this room and outside this room who looks at the penetration of insurance within the average Australian community psyche, their understanding about risk and protection issues, and if we were happy with that, I'd be going, we've got a long way to go. And I'm going to talk a little bit about that as we go through. So look, sustainability is the topic of the day, and I will go into talk a little bit about that, but I do want to give a bit of perspective as we've done our research over the last months about what the market looks like and the changing dynamics. And John's spot on in terms of the, FOFA, as we've called it, is the biggest change to financial services in a generation. And I think within the insurance space, whilst it wasn't front and centre, the same rules apply in a sense because consumers don't think about insurance different from their other wealth needs. And I think there are challenges being well met by many practices, but there are also practices that have to get on that proposition change as they go into the new world in a FOFA environment. And ultimately, we've got to get to an outcome. And I think there's a leadership piece on the table which John has spoken to, and I'll cover that a little later on. So look, some data, just a quick bit of data. The underinsurance gap, there are a number of researchers in the room, so tribute to the work that you folks do. LifeWise has done a huge amount of work at getting some of the issues on the table, but whether you're talking about death, income protection, TPD or trauma, the numbers are too low and the average claims payout are too low. Talking with Jocelyn a little before we started, many consumers actually don't know what they've got. They have a claim event and they don't know they've had a claim event until some point later they run into an advisor who asks them the question. Jocelyn told me a story about that today. I heard a very similar story last week talking to a member. So there's this need about getting the word out and getting people to actually understand what is needed when you're talking about protection of people's portfolios and assets and so on, strictly in an insurance sense. I won't really cover what John has covered, except to say that FOFA has absolutely changed our world. And if people thought that the elastic band is stretched and now we're going to go back, absolutely not. I can see the working group that the AFA is chairing on FOFA under Phil and others' leadership, which is starting to tease out what will the practice of the future look like, what will the advice process of the future look like, how do we account for all the FOFA requirements. And I think in the leading practices and advisory practices around the country, they've been on this journey. If you think about the practice management revolution or evolution, 1999, 2000, 2001, people were starting to take steps to, in a sense, build the connect between their client and themselves and put their providers or service providers almost outside the tent, and that the fiduciary and the financial relationship was between advisor and client, not so much with the product provider. And I think many in this room would absolutely know that. But I think what's also happened in conjunction with that is a GFC which has really squeezed and put into really clear perspective the issue around value. What is the value that advisors deliver, and how do we quantify that, and if our value was about access to the product or access to good performance, well, that value was taken away from the GFC and we didn't see a bounce back. If you're an investment specialist, it's been sustained and the uncertainty is still out there. But I think also the rise and rise of the internet and the models that are now, in a sense, disaggregating information and making consumers far more powerful in the way that they look at information. So you've got the rise of the direct marketplace. Anyone who ever watches daytime TV, I haven't for a while, but you can't, daytime or late night, whichever your preference is, you would know that there's lots of direct sell offers in the marketplace. There's funeral insurance, there's direct sell insurance. The group marketplace through corporate funds and industry funds has lifted their game. Some good research in there as well. And the internet is empowering a lot of this stuff. So I think if we go back to the elastic band piece, there's competitive forces coming into the marketplace. But we're in a market that's so, as I mentioned earlier, so underpenetrated that actually it's a calling for us to lift our game and to get really clear about the value that we do deliver. So, notwithstanding the regulatory and the government issues, let me just put on the table some insights from researchers. This is drawn from NMG, it's drawn from Rice Warner, from Plan for Life. It's an aggregate of a whole bunch of information. And it kind of tells the story that the industry is in pretty good shape. That the industry's been returning a 15% return on capital, and if you think about that as an investor, if you'd got that sustainably over the last few years, I think we'd all be pretty happy. That the business is growing. A lot of the business growth is coming from CPI increases and age-based increases, but that lapse rates are rising, and so John's point is spot on. And because of consolidation in the marketplace, there's a lot of legacy systems, a lot of legacy books and so on. And there has been a rise in competition as agile, smaller players have come into the marketplace. So it kind of, like in any competitive marketplace, the best are thriving. But there's a legacy issue that we need to address. So you put these pieces into the mix and go, frame that up with the changing marketplace, frame it up with the GFC and frame it up with an overlay of regulation and where the government's at, and it says to us, Houston, we have an issue. I don't know that we've got a burning problem, but we certainly have an issue, and it behoves us of this generation of leadership to absolutely nail the issue. Some of the other pieces that have come out of the research, and I'll just tease this out from a product advice and consumer perspective, the product range has been reasonably stable. I think all of us who remember Dr. Christian Barnard being the father of trauma insurance, and came on road shows and tours, that in a sense was the last bit of new product innovation in the marketplace. So there's a piece around here, do you innovate within product and pricing, or do you actually innovate around consumer need? And I think the research is telling us there's an opportunity to do that. The other piece is how it then feeds into the efficiency framework, and this is a conversation we've had with the FSC. How do we make insurance efficient in the same way that funds and platforms are efficient? How do we make it easy for consumers and advisors to get data and feed it into the main platforms and financial planning software that's out there? So I think there's a key issue there, and as products upgrade, how do we treat the product upgrade piece? Consumers, I mean, ultimately this is our mandate. If we can't speak effectively and clearly and articulately to consumers about what we do, then we're only ever going to be a niche part of the marketplace. Last year, the AFA, together with AIA and Core Data, commissioned some research. It teased out the same stuff that LifeWise pulled out. The people are saying insurance is expensive. They're saying it's a low priority. They're saying we don't quite understand it. They're saying we don't understand it because we actually aren't real good at telling the story, I don't think. And there's an advice gap. So you've got advisors who are specialists, you've got some who get into the marketplace at certain times of the cycle, and then you've got other advisors who are in the referral piece. So the issue around the skill set of the advice community is about how do we have more advisors talking to their clients about their protection requirements. Also part of this data, on the left-hand side you've got the uninsured, on the right-hand side you've got the insured. What did people rate as their most highly valued insurance? Well, even for people who were insured, had their life insurance requirements well under their medical insurance. So home and contents, comprehensive car insurance is a no-brainer, probably because you've got to have it. So the discretionary piece, which is arguably the most important piece, sits way down the bottom of the priority list for both sets of parties. And if that doesn't say to us as an industry, we've missed the mark on how we communicate, I think nothing else will. So some opportunity there. The other piece we've been speaking to the FSC about is around this expertise. So the AFA has been working now for a number of years with younger advisors. So how do we bring younger advisors into the place where they actually understand and are competent and confident about providing insurance advice? How do we incubate the next generation of insurance advisors? Because we know the demographic of advisors is ageing. I would say that's more pronounced with the insurance space because FOFA is going to shake the market out even more so. Hopefully we can bring people on that journey, but the conversations I already hear is that people are making some very clear calls. So I think, again, leadership piece, we've got a responsibility to bring the next generation through, give them the skills and the capabilities around providing advice. And I think I've spoken about the rest of it. And so to close off, and really in a sense, the challenge for us all is to get the settings right. Delighted that the FSC has said this is a whole of industry approach. It is a whole of industry approach. Delighted that they've engaged in the conversation to get the remuneration piece right. The principles for us are simple. Advisors and clients need to have choice about how they run their businesses, how they structure their models, and there needs to be choice within that. It's got to be the right model for both the advisor and client, and there need to be options in there that are sustainable. So John's put some stuff on the table. There is an in-confidence conversation happening, so won't go into a whole lot of detail except to say that in the next couple of weeks I'm hoping we'll get to a point where we can walk away and have met everybody's requirements. The AFA Working Group on Insurance met on Monday. We discussed and syndicated some of the thinking that we've got to, and that's a fairly broad church of representation. And I think people are starting to get the broader narrative, and then how do we solve this, and what are some of the options. So it is a test of leadership and collaboration. Delighted to say that is starting to happen, and really, really well. We've got to get the conversation really clear. And for mine, I think once we get over this, let's use this as a launching point to actually have a better conversation as an industry, all parts of the value chain, with the people who really count in the marketplace, and that's the consumers. Thanks very much.